Amgen is a major biotechnology company.
Right, and we've picked this one too. So it's a little bit more niched than Johnson & Johnson. Doesn't have all those other devices and consumer goods. But the core of the business, and remember it's a biotechnology company, is Neupogen, which is the EPO derivative. EPO, of course, is erythroprotein, and it's the thing that people take for red blood cell stimulation. And then they've got a bunch of other stuff like Enbrel, which is for all of those rheumatoid arthritis conditions, and then Repatha, which is a new thing for cholesterol. If you've got that problem where you don't respond to the statins and your high bad blood cholesterol thing is still too high,
were you a pharmacist in your previous life? you know the game.
Well, this is a fabulous company again with lots and lots of pipeline developments.
Market cap $125.9 billion US dollars, price to earnings ratio of 16.8, and a dividend yield here of 2.4%. Amgen has been a discussion point for us. It is one that we own in the international portfolio. Would you endorse our buy on that one?
So it still looks very attractively priced. I mean, we mentioned Johnson & Johnson now on a forward P of about 17 times. This one is trading on 14.2 times. It does not look expensive at all. And it is doing some really interesting stuff. Apart from it having a really solid portfolio, as Paul mentioned, they've also done kind of transformatory work in just the way that their business is structured. So cost of sales, some of the lowest in the business from a margin perspective, or cost of sales margin low, so gross profit margin very high. They call it a competitive advantage specifically because they're just better at it than the rest of the American pharmaceutical companies. And yeah, I mean, they also have a really solid pipeline. One thing to be a little bit concerned about here is that their pipeline is perhaps not as advanced as some of the other pharmaceutical companies. And when you have an early stage pipeline, there are a lot of risks. FDA approval is a risk. Data, the kind of data that you get from your tests.
To get from stage 3 to approval.
Absolutely. So you have that. But one very interesting thing that I read up on this morning is these guys, in the battle against biosimilars, which is basically generic products, they're not only on the defensive and saying, oh no, please don't take my patent. They're also actually manufacturing and developing generics themselves. So they're kind of doing both
Playing
of those
both
things.
sides of the coin.
Absolutely.
Paul?
Yes, that's a good point, because there's a drug called Humira. I forget who makes it, but it's the world's #1 selling blockbuster drug, and it's used for arthritis. Because like I said earlier, a lot of old people with arthritic conditions, and that's permanent. So what Amgen is doing is developing its own biosimilar for Humira in order to go after one of their major competitors' product.
In the arthritis space.
And then a whole lot of other things. I mean, I have actually got a side investment, just as a quick side pocket, in a company called Cytokinetics, which is making a drug to stabilize your heart when you're having advanced heart failure. You know, when people get to the doctor and the guy says, well, look, you need to have a bypass like today. They give them this drug which kind of calms your heart down.
Gives you a day or two before you have to go in for
Exactly, and Amgen is actually funding this small company, Cytokinetics' phase 3 trial. So that's a kind of example, and in exchange for that, they get to commercialize the drug if it gets approved.
If it gets approved,
and they've got about
then
15
it becomes
partnerships
a blockbuster. It
like
sounds
that.
as though it would do
Well,
very
it's
well.
a high stakes game. You know, the fact is not every drug that's developed is going to sell in the billions of dollars, but these guys have the research smarts to go after those very attractive markets.
Shall we call Amgen? Look at the share price graph. We're at $165 on this one.
Yeah, and it's sort of been at that level for a while. It's put its nose up into the 170s for a while, and there is just a concern. I mean, we haven't mentioned it yet, but Hillary Clinton has stated quite overtly that she thinks some of the drug companies in America charge too much. So I think there's a little bit of ambivalence out there in the pharma market generally
as to
about
what a Clinton administration would mean for the pharmaceutical environment.
Because, you know, sometimes people say things in politics, then they get elected, then they don't do them anymore. But I don't know.
Well, I mean,
on that point, you are the one with your finger on the pulse. You've been looking at the website, saying who's going to come in. Where are we sitting?
It looks like a landslide win for Clinton, because, you know,
Trump paused for a moment there.
Trump is a flaming garbage fire. I mean, it's like the whole thing is going up in smoke.
Let's leave the US politics. Hot or not?
So at this valuation, it'll have to be a hot.
Hot or not, Paul?
Yeah, I'm not quite sure why it is so cheap. That makes me nervous, but definitely hot.